Yeah. Good evening, everyone. I am CA Ankur Kataria, and I welcome you all to yet another webinar on global trends in internal audit, organized by the Internal Audit Standard Board of ICI and hosted by the Gurugram branch of NIRC of ICI. So, before we start, I would first like to invite Charanjot Singh Nanda sir, who is the current council member of ICI and also the chairman of the Internal Audit Standard Board of ICI. Nanda sir is the current council member of the 25th Council of ICI. He was the member of the Quality Review Board set up by the Government of India. He was the chairman of Committee on Internal Audit and also the chairman of Committee of Members in Industry of the Institute of Chartered Accountants of India, and many other more accomplishments he has. So I would quickly like to invite Nanda sir for the welcome address note and keynote session. Yeah, handing over to Nanda sir.
Thank you, Ankurji. I'm very happy to be a part of this great webinar which is going to be held today. I see CA Jatinder Yadav, the Secretary, Gurugram branch. Two of the very revered speakers of the day, CA Jatinder Khatri, CA Deepika, and CA Dharmesh Yadav, my younger brother, CA Ankur Kataria, and all team of Internal Audit Standard Board, including the Secretary Aarti and the coordinators Shivani and Surbi. Ladies and gentlemen, I am truly honored to be amongst you. Whenever we do a program on Internal Audit Standard Board, and let me tell you, every Saturday 6 to 9, the slot is booked. And every fortnightly, you have a program on standards, internal audit standards. Your board is very overwhelmed to ensure that we give the best to you. Today, CA Jatinder Khatri would speak on real life use of data analytics and visualization in internal audit. All of you know, internal audit is a sunrise area. That thought process, that indulgence of technical knowledge. I'm reminded of a couplet which says, "Gar khairat mein milti kamyabi to har shakhs kamyab hota. Gar khairat mein milti kamyabi to har shakhs kamyab hota. Fir qadar na hoti kisi hunar ki aur na hi koi shakhs lajawab hota." If you learn things, you have to create the technical horn, the skill to perform. And these programs ultimately put at parlance all chartered accountants who intend to foray into internal audit, the sunrise industry. The second speaker of the day is CA Dharmesh Yadav. He would speak on key risks of credit information companies, commonly known as CIC companies. The third speaker of the day is Madam Deepika S. She is again a very astounding, a very well-balanced speaker who would always bring out the technical issues with respect to every internal audit assignment. She will speak about risk 10-20-23 in internal audit. I would just want to tell you, ladies and gentlemen, that our entire thrust of the committee is to ensure that we give you best of the programs. We are at your beck and call. Whenever you want to give a call to me, simply call to me without any inhibition. My number is available on ici.org. The number of people who are joining ISB programs, the way the committee is scaling, the board is scaling newer heights every day. I'm very keen to tell you that we are so overwhelmed. We are so concerned and appreciative of the fact that it is only you who would make us move in the right direction. So I call upon you for any feedback whatsoever, any topic where you intend to come in, and we are always there at your beck and call. Thank you so much. Over to Ankur Kataria ji for the further proceedings. Thank you so much.
Sir, you need to unmute.
Ankur, you are on mute.
Sorry. Thank you so much, sir. Yeah. Now, I would like to invite CA Jatinder Yadav, sir, Secretary, Gurugram branch of NIRC of ICI, for the opening remarks. Handing over to it, sir.
Thank you very much, Ankurji. First off, it is always a very delightful to listen from our senior Central Council member and Chairman of Internal Audit Standard Board, CA Charanjot Singh Nanda, sir. Thank you very much, sir, for your encouraging words and for your words of wisdom. On behalf of Gurugram branch of NIRC of ICI, I welcome Chairman of Internal Audit Standard Board, CA Charanjot Singh Nanda, sir, Vice Chairman, CA Gyan Prakash Mishra, sir, in his absentia, our very eminent and learned speakers, CA Jatinder Khatri, sir, CA Dharmesh Yadav ji, Madam S. Deepika, and all other respected fraternity members who have joined this particular program on internal audit. though I do not have an expert knowledge in internal audit, but what I believe internal audit in organization has evolved from the task of just financial audit, the traditional work of function, operation systems, fraud investigation, and special product audit work, has taken a backseat to the more pressing need of regulatory compliance as well as business process optimization. And I believe all our three faculties and guest speakers today will address these very important aspect of internal audit. Without taking much time, I'm handing over to Ankur Kataria ji. Thank you very much, Ankur ji.
Yeah, thank you so much, sir. Thank you so much. Now we will now begin with our technical session now. The first topic that for is today is real life use of data analytics and visualization in internal audit. And we have with us CA Jitendra Khatri sir, Associate Vice President Internal Audit, Valvoline Inc. Jitendra Khatri sir is a seasoned internal audit leader with 18 years of experience in internal audit, SOX audit, risk management, and SAP. He is a rank holder chartered accountant, company secretary, and a certified internal auditor. He has worked in diversified industries like HCL Technologies, DCM Shriram, and JK Tires. Jitendra sir is currently leading the global internal audit team of Velvoline Inc. for its international business in Europe, Middle East, and Africa, and also in Asia Pacific, including India, China, Australia, and other Asia. Now, I would like to request CA Jitendra Khatri sir to share his views on the real life use of data analytics and visualization in internal audit and take it forward from here. Yeah, thank you. Uh,
For the invite. Let me share my screen and then we can start from there.
yes,
Is
sir, it is visible. Yeah.
perfect. Okay. Yeah. So as we are talking about the real life use of data analytics and visualization in internal audit, so I thought like before we start into from the internal audit perspective, let us understand that why data analytics is necessary and how the data analytics are being used currently in our other or in our own organizations as well. So why data analytics or big data now? The reason is very simple. These are the 5 V's which are the key drivers for it, and those 5 V's are volume, variety, velocity, veracity, and the value which we want to derive out of the data. So in recent past, we have been generating lots of data, and those data, therefore, the volume has increased enormously, and therefore, the need of data analytics has arisen. Second portion is from the variety point of view. So the data is not only being generated in the structured format, but also in the unstructured format as well. Velocity, which is the speed at which we are generating the data, has increased a lot, and therefore, again, it is contributing to one of the 5 V's, and therefore we need to perform the data analytics piece. The veracity means like what is the accuracy and quality and trustworthiness of the data, and therefore this 5C that means 5V includes the veracity part of it. And the last part portion is about the value and how do currently organizations take the value out of the data analytics. So this is the pyramid which will show you that. So we start with the data. From data, you analyze the data and you try to find out the insight out of the data. Out of that insight, based on that insight, business take the decisions, and based on those decisions the value is generated. And therefore, this 5V, the last portion is the value. So volume, variety, velocity, veracity, and value. So this is at a very 50,000 feet level about in our businesses. This is why the data analytics is being utilized. We'll move to in subsequent slides. We'll also talk about how it is being used in internal audit per se, and then how can we do the visualization, everything. So we'll cover that in the subsequent slides as well. I'm not the expert of the big data, but I have been a vivid learner over a period of time. These are two broad frameworks which I thought should be helpful to understand and appreciate that is how the currently businesses are utilizing their data. One on the left hand side, which is on the Hadoop and Apache Spark. This is the framework wherein you ingest the data, which means like on a live streaming basis, whatever, whether it is social media or your ticketing system, or there are n number of in-house, there are n number of sources through which the data is being ingested. And for that, there are tools like Scoop and Flume, which is being used. From the processing point of view, again, it is the Hadoop, HDFS, Apache Spark, which are being used. Then you analyze the data, which is from Hive, and you do that based on that, and then you access based on you and Cloud Search. And finally, the visualization part is being taken care of by the Tableau. So this is one framework which is currently being used by many organizations from the big data point of view. There are wherever the organizations are more uh, towards the cloud part of it, those organizations use this Elasticsearch stake as a use of it. And again, it's quite similar from the steps point of view. You ingest the data through Logstash or Beats, then you analyze in Elasticsearch. XPack helps in alerting, mirror monitoring, reporting, and finally you present that in the form of, from the visualization point of view, in the Kibana. So these are two broad frameworks which are there. Obviously, different organizations use different frameworks also, and different tools are being utilized by them. As an internal auditor, I'm not saying that we should be expert of it, but at least we should be knowing that this is the kind of framework which do exist, and therefore there are many data points which we will be able to take benefit of, and we should be able to understand this when we are working as an internal auditor. So these were just two frameworks for your purpose to understand that this is how currently businesses are utilizing the data, and they are taking the decisions based on that data. So therefore, internal audit cannot remain aloof from them, and therefore it is equally important that in internal audit as well, the data analytics needs to be performed. And how, what usage, what is the benefit which we can get? One is the realistic assessment, because once you have a uh, instead of relying on the samples, when you are doing a complete data or the analytics on the data itself, then you get a realistic assessment. You are not just giving a representation of it, but you are really you are analyzing the data, and therefore it will be a realistic assessment. The connected portion is the prioritized effort. What does that mean? Like, if you know that my 80% of the problem in is in X warehouse or X plant, so then you know that you can prioritize your efforts. So therefore, since you are able to do a realistic assessment, therefore you will be also having a prioritized efforts to take care of that. At the same time, you will be able to provide practical recommendations, and finally it will be an insightful report. So that's the benefit of using data analytics in internal audit. These are the four broad buckets which requires us to be more data analytics driven in internal audit. And finally, what it impact which it make is, it is the data analytics only who can translate the possibility of any risk into an impact. Otherwise, you will just say that, okay, there may be an overpayment. Whereas if you perform the data analytics on the 100% of population, you will be able to say that yes, there had been an overpayment. So that's the kind of difference which data analytics can make and add value to your audit report. Now, when we talk about insight, obviously there are three, 5C, 5I, and 5Y, which I believe are very, very important from and generating an insightful report point of view. 5Cs are condition, criteria, cause, consequent, corrective action. 5I is issue, information, insight, implication, and implementation. There are somewhat overlap between 5C and 5I, but from a importance point of view, I thought it is equally important for us to understand 5C, 5I, and 5I. And 5I is nothing but a root cause analysis. So you need to try to find out the root cause, wherein you try to find out what is the reason why it has happened. Suppose if it has happened for X, so why that X has happened. Suppose it has happened, the X happened because of Y, so why Y has happened. So that's how you try to find out to 5 level below why, and therefore you will be able to reach to the root cause. From a 5C point of view, what is the condition, like what is the standard against which you are looking at the audit? What is the condition, which is the background information which is there? What is the criteria condition against which you are evaluating that aspect? What is the root cause of it? What is the impact or consequence which will be there, and what is the corrective action? So whenever you issue any report, these 5C, 5I are a good reminder to yourself, whether it is from a data analytics point of view, whether it is making sense or not. This is evolution of data analytics within any organization. Let me take an example. So, and I have seen this happening. When I started my career, we were primarily on this phase. I have seen over a period of time across the organizations, they have moved from sample-based testing to the predictive analytics. So that's the evolution of the role of data analytics in internal audit. Obviously, when you started, it was more of a sample-based testing, substantive testing. When do you do a substantive testing? Even when the data is complete data is not available, or the data is lacking the change log. So in that case, you will have to be dependent upon the sample based testing. But again, the extent of the sample based testing will be very, very less. The next step would be the Excel based data analytics, which is generally for the non-standard cloud-based application or non-repetitive ad hoc analysis are being generally be performed in the Excel. Wherever you have a repetitive analytics, where you know that you will have to perform the same kind of analytics for the different entities, different plant or different period of time, you generally go for a data analytics tool, and therefore it might be idea, it might be power query, power bi, tableau. uh, there are a number of uh, Alteryx. These are the various tools which are available, which we can certainly think through. But in this case, there are many examples wherein the analytics tools are not connected with your system. That is the another level from this would be whether your tools are also connected with ERP. So therefore, you need not to put in data yourself by way of Excel upload or something. It will already be there. It will be connected through your system. So in our organization, like the way it is connected with the SAP BIW, and even the idea is one of the example wherein you can have a ERP tool like that. The next step would be you have the analytics. Now you can move to the integration with the visualization. So, we had done that in the SAP SAC, which is an SAP Analytics Cloud. Another one is the Power BI linked with SAP BIW and Power Query. So these are two platforms which we have worked on. And finally, the objective of these visualization is more from a continuous control monitoring perspective. It is more from a like and therefore it can't be an isolation activity. It has to be collaborative with the business to understand what is their requirement and how can you add value as an auditor. So these are various evolution which are there, and the finally would be the predictive analytics, which we have not yet arrived at. But yes, the initial slide which I talked about are in the way of that, and we need to on a continuous basis need to work with the business to understand where the things are going on and how can we as an internal add value to it. From audit report evolution point of view, in the past it used to be like 20% based on the data analytics and 80% was based on the sample based issues. Now it is turned down, wherein currently it is 80% the data analytics based issues are there and 20% only based on the sample based testing. And ultimately you will be able to have a holistic view in the issue. You will be able to quantify the impact. Efficient analytics and the visualization will be possible because of that. These are the I'll quickly run through these slides also, and then we'll focus upon on the other aspect. What are the steps for the data analytics piece? As we talked about, from a business point of view, generally it will be the data ingestion, processing, analyzing, and access, and then finally reporting. That's the broad steps which are there from a business point of view. Similarly, from an internal audit point of view, it is the what is the hypothesis of the audit issues. Hypothesis can come either from the audit objectives or it can come from the data analytics library. From audit objectives point of view, it will be the operational efficiency, financial reporting, and the regulatory compliance. So it means like, what are your audit objectives? What do you want to achieve out of it? Based on that, you will be able to identify the hypothesis against which you need to perform the data analytics. Beyond the audit objectives, there will be also be data analytics library, which will suggest that suppose if you are doing a procure to pay audit, in that case, your thought would be what are the fraud risks which are there, what has been the past audit results, and like duplicate payments. Those are some of the examples which can be there. So when you perform any data analytics, you need to identify one, what are the audit objectives and whether you can take help of any data analytics library or not. That's how this hypothesis is the first step in finding it out that what should be the data analytics strategy. The second aspect would be from a practicality point of view, what is the data source? Whether the data is actually captured in the system or not. Is there any alternate data source available? Is there any alternate system which is available? Whether the completeness and accuracy of input data is being ensured, whether the data itself is being relied upon by management. Because many times what happens, you perform a data analytics based on some irrelevant system, and then finally you come up with your observation and go to the management. Management say, though this data is captured, but we don't ensure the accuracy of this input of data. Therefore, we are not relying on this data, and therefore all your analytics is not making any sense to us. So therefore, it is equally important that whatever data or systems which you are using it for your data analytics purpose should actually be used by the management. Then only it will make a difference. And when you evaluate the data source, you need to also look at that where are the master records, and where are the transitional data records stored. What it simply means that master record would be like customer master, vendor master types, and transactional record will be the PO listing, or even the invoices or the sales invoices. So those are the transitional data. So where are those stored? And finally, it is equally important that you need to have a knowledge of the system and access to data. And obviously, finally, you will be exporting it to the Excel. But when I talked about the knowledge of the system and access to data, and therefore, I love this term, and I heard in one of the uh, conferences, and I generally use this in all my presentation, that uh, uh, gone are the days wherein the person need to be only knowing the accounting part of it. At least from the internal audit point of view, the auditor has to be a purple auditor. And what does it mean? The person needs to also have an understanding of the business, which is a blue. So business understanding is key from the internal audit perspective. At the same time, having a knowledge of IT, and IT does not mean it also includes the IT general controls, but also the system understanding is equally important. And therefore, it is a purple auditor is the key combination which you will be finding it out. And more organizations are moving away from having a traditional accountant only auditor versus the and I'm saying I'm chartered accountants who have developed the skills of understanding the business as well as the IT are certainly in hot cake for any of the organization. So therefore, the purple auditor is a need of R from that perspective. Data cleaning, it's very at a very high level. You format, you aggregate, and then you test that whether your formatting and aggregating is working or not. And these are the sub steps which I just noted down here for your purpose. But this is the step. So you hypothesize first, then you know the data source, you do the data cleaning, and then you move to analyzing and interpretation. So the next step is analyzing. And again, there might be a number of ways you can analyze these data. I've just kept it very high level. You can compare your data. It might be the if you are comparing the data between operational and financial systems, you will be able to find out a lot of inefficiencies and inaccuracies. Different functions, the data maintained by the different functions, data maintained by the different systems, all those comparisons can throw out many exceptions which are there. The another one is ratio analysis, which is very, very apt being used. We have been using that in our organizations also. Uh, like whether looking at the percentage of sale, percentage of to profit, percentage to total, percentage to balances, cost per unit, profit per unit, GB percentage. So these are the various key statistics which are being used from the ratios point of view to understand more about the population which is available. The next would be the trend analysis. So you can perform a lot of analytics based on a year YOY, which is year on year comparison, quarter on quarter comparison, or month on month comparison, which provides these exceptions certainly provide a way to get into more onto details of it, which is very helpful, and wherein you will be able to provide those information to the reader of the audit report. And the finally summarization, though it looks very simple, but average, weighted average, median, min, max, top 10, top 5. But again, this is really helpful when you are putting that into practice, and when you present that to the management in a more lucid manner. One, when you are talking about top 5, top 10 types, customer or vendor, obviously management will listen to your conversation that, okay, it's important or significant and material which is being talked about. So therefore, it is important to also summarize, using the summarization tool also. Though it seems very basic, but I have seen a miracle happening just based on these data analytics. You will be able to influence the process owners to take actions on the recommendations which are being provided. And the final portion will be, there are many instances wherein the data analytics has been performed, and just because you have performed the data analytics, that does not mean that it has to be reportable. There might be a number of exceptions which has come across, but what you need to make an assessment is like whether those exceptions are material enough, whether those exceptions are logical, and whether those exceptions are relevant. I think if these three parameters are being looked at, and finally, if we think that these exceptions are material also, logical also, and relevant also, then it certainly should be reportable. And we should not forget, like, there is a law of wasted efforts. Just to give you a statistics, like line only succeeds in one out of the four hunting attempts. So there is a 25% failure rate, and same might happen with the internal auditor also. You might be doing a lot of data analytics, but every data analytics will not result into a reportable issue. But that's fine, because we need to be relevant, material, and logical. If we are doing that, then certainly we will be able to add a lot of value to the business. So these were the steps which I talked about. I'll just go back and refresh what we have discussed so far, and then we'll move forward from there. So we did talk about how uh, why data analytics is being used. So this section is generally talking about what is the use of data analytics in the business currently, the way businesses are using. This section talks about how why internal auditors should also look at the data analytics piece, and how the data analytics have evolved over a period of time within the internal audit. And these are some of the steps of the data analytics: hypothesis, data source, data cleaning, analyzing, and interpretation. Uh, so now I'm in the kind of last segment of my presentation, wherein we'll talk about some of the hypothetical examples which are there, and then we'll open for the question and answer, depending upon what is the way forward which Ankit was to take on. This is one of the hypothetical example number one. Suppose if I simply mention in my audit report that in 3 out of 10 sample distributors, the target form was signed after the end of validity period. If I say only this and as a line, obviously it will have a less impact. Now I'm just trying to provide that insight, like how can an internal auditor be a more data driven, system driven, because this is a sample exercise which we perform, right? Because obviously the target forms are not electronized, therefore you will have to rely on the samples. You looked at some of the samples, you selected 10 samples. Out of 10 samples, 3 samples had the target form signed even after the end of the validity period. So if we just go with this statistics, it might certainly not have a impact. But if I go and tell that, in 3 out of the top 10 distributors by revenue, the target form was signed after the validity period with an average delay of 1.5 months. What does it do is, when the moment I added the summarization of average delay of 1.5 months, it is telling the management the extent at which the problem had been there. And if we don't stop over there only, and we say that, okay, out of that, the three distributor contributed to the 38% of the total revenue, out of the 87% of the total revenue by top 10 distributors. So I'm also talking about from the materiality point of view. If I just say this, versus if I also mention, quantify, summarize my observation by saying that, okay, what is the average delay which I have come across? So it is 1.5 months of delay. It is not 5 days or 2 days which I am talking about. After 1.5 days average delay which we are saying, and then what is the impact? Like, these were not only the random samples which we random contribute distributors which are there. We selected top 10 distributors, rather than a top only 10 sample distributors versus top 10 distributors. Certainly will have a greater impact, because now we will be able to tell that the top 10 distributors are contributing to 87% of the revenue, and out of that, 38% pertaining to these three distributors. So that is the beauty of the data, wherein you will be able to provide a lot of insight to it. Now, what is the visualization which can be used here? So like the point which I talked about here in the point number two, those have been shown here more from the visualization point of view, which will give you a better picture of understanding. And this is how we have been adding. These are some hypothetical examples, but this is how we have been adding that visualization in the audit report, wherein the people are interested in reading what we are saying. And just to give you a perspective, what all are important factor for that, the importance is also on the header which you choose for your chart, the legends which you mention here. Secondly, it has to be also be legible, should not be very small. All those factors needs to be considered. And once you do that, this is an example again, the same data out of 87%. So top 10 contribute to 87%. Out of that 87%, non-compliant is 38% and 49% only, which is the compliant one. So this is like breakup of 87% further. So this is an example which shows if you show this in your audit report, obviously it will have a greater impact. And same from the trend analysis point of view, if you look at, this is the revenue which has been achieved versus this was a target revenue which was there. So target revenue itself had been given so low, whereas the actual was high. And if you look at from the past trend point of view, if you look at this number only in isolation, it might look okay. But if you see that in the past the revenue had been higher, then why would you give a very lower target and then finally you are able to get an actual revenue which is quite higher? So see, there seems to be something fishy if you look at from this graph itself, that when the my past revenue had been on a higher side, why would I give? And that too, one, these target forms have been signed afterwards. At the same time, these have been given, and these were set at very lower than the past trends also. So these two statistics give information to management, and obviously they will be hearing or listening to the observations which are being talked about by the internal auditor. So this was one of the example. I have total 4 examples which I'll talk about, but this is one of the example which I thought might give you some perspective about, instead of giving a only random sample versus top 10, and only top 10, not only the top 10 but also the impact part of it, more from the quantification, and then from a quantification to visualization will have a certainly altogether different impact when you are presenting it to your auditee. This is another example, though I don't have a explanation to it, but I'll go through in verbal way. I'll explain it, that what these chart mean and how can you use that information also. Not information, but yeah, this is how you can also present your your observations. So this was one example wherein we said that, okay, that the this is more from a procure to pay perspective. We all had our bidding participation. All those statistics are captured in the system itself. So therefore it is equally important that your organization need to have these much of the system wherein the data is captured. If the data is not captured digitally, then obviously will not be able to provide much insight. This is an example wherein the relevant data is not captured in the system, whereas in this there the relevant data is captured. So even if the data is not captured, even then you can make an impact by adding these statistics even in your samples. And where the data is captured, then you can perform your analytics on the population as a whole rather than just depending upon some of the sample. So these were the 2 examples which I thought might be helpful here. As you can see, in 37% of the case only the single bids were obtained. In 63% of the cases more than 3 bids were obtained. But what has happened afterwards, like out of these 63% also, though I invited multiple bids in 63%, but out of which in only 26% of the cases we received more than say 3 bids. In others, we received only single bid in 15% cases and only 2 bids in 22% cases. It simply means that only the compliance, if the policy suggested that there has to be three or more bids which needs to be there, only three or more bids were there only in the 26% cases, which is on the total population. So if this kind of statistics you're going to the management and telling them that this is the way your current systems are being used, obviously they will be listening to your observation, what you are telling. This is again an example which suggests like bidders registered versus invited. So there were 1699 bidders which are there, out of which you invited only 18%. Now, out of the 18% also, there were few who had been, uh, they have been invited and always participated. But there are few who have been invited but never participate. Like 14% are the cases you're just adding them for the sake of adding them, but they have never participated. So again, there should be some review mechanism. So ultimately, in these kind of thing, you would want management to also utilize these systems themselves and should be able to come up with their own analytics, and on a periodic basis they should be taking the corrective action. So this certainly helps in providing that kind of insight to management so that they can take corrective action accordingly. So these are the two examples. I have two more to add on, but before I do that, I'll ask moderator, are we okay on time, or I need to slow it down or speed faster?
No, no, sir, you are okay on time.
Okay,
That's not an
perfect.
issue. Yeah.
Okay. So yeah, so from these are the two examples which we talked about. And then this is one again, Sunburst, which is there. I'll just try to explain this, how it is being used, and you can also use that in your working also. So if you look at this chart, is more on a again target form status of top 20 customers. So what it shows that, suppose there is a customer type number one, customer type number two. Now within customer type number one, whether the contacts are available and contacts are not available. When the contacts are not available, whether the target forms are not available or target forms are available. So this is how you are trying to show that, okay, 16, 25, 24, 89. This is the broad breakup which is there. But again, from a visualization point of view, you are giving them the view that in what is the kind of percentage through for which your the target forms are not available. So this is just an hypothetical example. This is not a real number. I just, but you can certainly provide that insight that, okay, suppose your division number one, how your division number one is doing against the division number two. Let's take it from that perspective. And wherever the contracts are not available versus contracts are available, what is more issue, like if the contracts are also not available and the forms are also not signed, so probably it is more a severe issue. Wherever you have the contract but you have not signed the target form, it is still okay. So therefore the red, amber, green was kind of used, wherein we said that in this case the contracts are also available and the target forms are also available, which is only 16 out of the total lot. So this is one example. Similarly here also, this is for the customer two, these are the example. Now if we were to provide top 20 customers review only by count, this is how it would look like. But if eh, but we did not stop over there. We said, okay, if we look at by count, this is what it looks like. But if we go by revenue, this is how it looks like. So see, here it is mostly red which were there. But if we go by revenue, what it means that for a bigger customers, we already had a contact, we already had the target forms. So that is how, by providing a perspective to management by the count and by revenue, you are also focusing upon the three check which we talked about: material, relevant, and logical. So this is more from a materiality point of view, that okay, probably your smaller number of smaller customers are not having a contact and the target forms, but the bigger ones do seems to have a both things in place. So that's why you would be able to see here this contract available is smaller one, where is the contract available now, it's equivalent to 50%. So this is an kind of example which you can think and see. Like again, we are talking about the top 20 customers only, that what is the kind of breakup by value which is coming in. But this is how you will be able to provide that insight to management, and you can use the Sunburst. Again, it's available in the present in the PPT form, in the Microsoft presentation PPT. It's available, but these are the some of the ways you can provide those visualization to your management. Obviously, there will be background, the 5 C's, 5 I also within this, but these kind of information, adding that information would certainly bring your auditees to take action on it, and they will be able to listen to our point of view what we are trying to achieve. This is the last slide from a examples point of view. This is again take an example of as a inventory kind of audit, wherein uh, this is a bridge which are being generally used, and again as an internal auditor also you can use that. So this suppose shows calculations by the management, and this shows the calculation by the internal auditor. And then what are the various reasons which you can think of, new products, blah blah blah, there may be n number of reasons which are there. You try to segregate into that, and therefore again, by if you are providing that kind of information to management, that okay, suppose this segment requires most attention, seems there is more issues coming out of it. So again, having an absolute number only by numbers, giving that, instead of that putting that in a chart, and that too by segregating by logical way, that would again entail management to take actions based on they will be able to take a targeted efforts on this particular category. The similar data was again, so these were based on the reasons which are there. Now these are supposed kind of material types which are there. So again, it shows like the total value which we are talking about. This is a total value which is there, category by category, and how provision as per management is differing with provision as per internal audit. So again, you are providing that okay, where the provisions as per management and the management and internal audit are matching, where there is a big gaps which are coming in. So these kind of information would certainly provide more insight to the management, and they will be driving them to take actions against it. Adding those visualizations certainly help in getting more buy-in from the management, because the picture says more than words, 1,000 words. So that's why we have been utilizing this, and this is very successful model which is there. The last piece, again, these data shows that you can add multiple layers. So these are the inventory balances versus the percentage reserves which are there. There are, even at the beginning of the audit, you will be able to find out a lot of discrepancies which are there based on this data itself. So again, using those data analytics and visualization in the audit report certainly help in being a better auditor. And obviously the whole the idea of it is very simple, that are you able to achieve these 5 C's, 5 I, and 5 I? Are whether your the audit report which you are issuing are having a issue, information, insight, implication, and implementation. This 5 I and 5 C and 5 I, these are the crux of this, and we will be able to achieve this by way of providing data, not only the data analytics, uh, not only providing the plain information, but quantifiable and that too presentable information would certainly have a greater impact on the on the auditee, and they will be influenced to take actions accordingly. And these were some of the examples which I had quoted, one, two, three, four. Obviously, we could add more, but I thought at least to give you a perspective about how these data analytics and the visualization can be used in your audit reports also. I'm available on LinkedIn, and this is my email ID. If you have any further questions, uh, please feel free in your question and answer session, and even you can write a mail and I'll respond to that as well. So with that, I am through. I am done. Uh,
Yeah, thank you so much, Jitendra sir, for such great insights. Thank you very much. Before we can move forward, I would like to request Girish, our technical support team, as I am getting a lot of questions regarding the webinar link. Is there in the change in webinar link, or the webinar has been delayed? I think there is some issue with the webinar, accessing the webinar link. So please look into it, Girish. Mm, I think he's not there. Yeah, okay, so we can move forward with our next session. So now we can move forward to our next session, next technical session for today on key risk of credit information companies. And for that, I would like to welcome Mr. CA Dharmesh Jadhav sir. Dharmesh Jadhav sir is a director with the Financial Services Risk Advisory Practice in Grant Thornton Bharat LLP. He is a chartered accountant and company secretary with 11 plus years of post qualification experience in risk consulting. He has worked across various private and public banks, asset management companies, insurance, ARCs, and non banking financial companies, NBFCs in India and Nepal. So now I would like to request CA Dharmesh Jadhav sir to share his views on the credit information companies, basically called CIC, and take it forward from here.
Yeah, thank you, Ankurji, for the introduction, and thank you, everyone, the council members and the board members and all of that, including the Nanda sir, who kind of invited me to kind of share my thoughts on one of the topic. And I thought, while these are basically a weekly programs, and CIC is being only four in India, which is registered with RBI. So I thought of kind of discussing on the credit information companies, which is critical from a financial service perspective, as all the NBFCs and banks kind of use these credit reports as far as individuals or the corporate is concerned in terms of taking the lending decisions, which is of course very much important for an individual and company and for the economy as well. So with that, I've kind of noted out certain sections. What are the learning objectives that we have as a part of this session? The introduction of credit information companies, CICs. What are the products and services being offered by CICs in India? What is the life cycle generally for how the credit information reports, which I think most of us would have already kind of have their CIBIL score. We kind of loosely mention as CIBIL, but CIBIL is one of the credit information companies, but there are three others as well. So how the credit information reports are created, and what are the challenges faced by CICs, or maybe what are the key risks, and how, as an internal auditors, we need to kind of suggest certain, the benchmark practices, certain controls in place, and how do we review whether those risks, identified by the CICs are managed properly. So yeah, I mean, this is further broken down into multiple sections within the introduction to CICs. We will discuss what are CICs. That is something that is important to understand, because most of the time we kind of understand CICs with a credit rating, but they are technically different. What do you mean by credit information is also important. What is credit information, right? How do CICs work? What is the role of CICs? Why CICs is important in the first place? What are the permissible use by credit information? So as I said, that RBI regulates the CICs, and hence RBI has a lot of control in terms of how your credit informations are used. How the CIC function? There are certain principles that are issued by the RBI, which needs to be followed. Now there are certain controls which emanates from the principles which we will talk in detail. Of course, and the products and the life cycle of CIC and the issues faced by the CICs. We'll start with the section 1, which is introduction to CICs. So what are CICs basically? So it's an organization which collects and analyzes the credit and loan related data of an individuals and companies, right? And it gives a report card in terms of what is the credit worthiness based on your past history of the loans that you have obtained, the credit card payments, and some of those other elements. It is important to understand it has to be an independent third-party institutions. So it can't be related to a bank, it can't be related to a financial institutions from whom the data is collected. Okay. So it is very much pertinent to understand that the data is not owned by the companies, the CIC companies. It is owned by banks. It is owned by the financial institutions. who kind of submits all these data to CICs, which are the members of the CICs. And then the CICs fetch those data from those portals. So there are generally SFTP folders which gets created, and all the member banks, member NBFCs, member financial institutions need to kind of report those on a monthly basis, at least, to the CICs, and CIC pull those data for and upload that in their system, their model. So different CICs have a different model, and based on that, there are reports generated in terms of the credit worthiness. What do you mean by information is the second sub bullet. The one is basically the loans and advances, the outstanding credit card, outstanding amount in the credit card, the other credit facilities obtained by a borrower. The borrower could be an individual, or it could be basically a company as well. Whenever there is a company or whenever there is a corporate, there is a guarantee furnished by a credit institution that also needs to be included as a part of the credit information, and any other information that gets regulated. So there is an annexure which I have, which I will take you through at the end of the presentation, which has a mandated list of all the information that needs to be reported by banks or by financial institutions of a borrower. Or it could be an individual, and it could be a corporate as well. There are different sets of annexures for the individual and for the corporates, and a different set of annexure that which has a list of all the data that needs to be reported for a microfinance as well. Now, how do credit information companies work? So credit information companies, they collect, as I said, the data from the banks and financial institutions. They generally create the models in which the credit information will be uploaded in the model. They will run the model on a monthly basis or on a daily basis. The demography changes, as you would agree. So I could be a regular in making the payment, right? But I may be, after 6 months, if my financial situation is not good, I may default, in making the payment of an EMI, or making a payment of a credit card as well. So it is important that on a monthly basis, the data needs to be extracted, of all the customers or all the borrowers, to say, and then uploaded on the model. And that is how your score, and you would have noticed that your score changes every time. It either decreases or increases, and it could be same also considering the span of your credit history. Right. The role of credit information company. So it is very much important because I don't think so any banks or any NBFCs take any credit decision in terms of the lending to any individual or a corporate without understanding the credit worthiness, and hence it is important for any banks or financial institutions to take decisions based on the credit information report the CICs kind of generate. How it happens is basically there is a registration that happens. So CICs register the banks and financial institutions and some of the other specified users also, which is mandated, which is approved by the RBI. So it is not that Dharmesh wants to kind of take basically they see the credit report of Ankur, for example. No, unless and until I have a power of attorney to obtain the data on behalf of Ankur, I cannot just go and take those. So there is a registration process that happens. You would have seen that, if you have applied for a loan or you have applied for a credit card, they generally ask consent from you that, we will pull the CIBIL report or a CRIF report, or maybe, some of those other reports from a credit information companies where they are registered as a member, and they will pull the report. So there is a whole lot of process that gets that is involved in this. Right? Yeah. So moving on, what are the permissible uses of a credit information? It is important, and we all know that how privacy of a borrower needs to be kind of protected, and hence the RBI has come up with a list of controls that needs to be put in to ensure that the data security is in place. There are permissible uses also of a credit information, which is guided by an RBI regulation. and how do they function, that is also kind of mentioned as a part of the RBI circular. So the act is CIC Act, which is Credit Information Companies Regulation Act 2015. So anybody wants to kind of get understand this in more detail in terms of what are the other things that is specified as a part of the act, you can go through that. So credit information provided by the CICs to a specified user can be used only for the following purposes. So to make effective credit decisions, as I said, that the report will have all the credit information about the past history up to 7 years. That we will go in details, because there is a principle on the preservation of the data also, and to what extent a CIC can preserve those data, and the same needs to be used as a part of credit information reports as well. It also helps in kind of deter the concurrent borrowers and serial fraudsters. So it helps the lenders or the banks or financial institutions, including NBFCs, also to curtail their defaulters. So if there is a history of defaults of any customer, okay, you would have seen that NBFCs or NBFCs still they take a certain amount of risk, but banks they will kind of not kind of sanction any loan if you have defaulted. So it helps in deter the concurrent borrowers. It also keeps adverse selection of the customers to the minimum, which is related to the defaults only. It also reviews the evaluate the risk of its customer. So as I said, it's an ongoing process. On a monthly basis, the data is collected. So if your customer or maybe if your borrower is kind of low rated because his CIBIL score is higher, but in 6 months or maybe after a year, if he has made certain defaults because of which your CIBIL score or maybe the credit information report score goes down, so it evaluates the risk of a customer, so that you as an auditor, you need to flag if there are any customers whose risk who was a low risk but then it became a high risk. What are the controls in place for a company to kind of ensure that the additional measures in terms of the collections, in terms of following up with the customer is in place. And then, of course, there are the certain statutory and regulatory obligations also CIC has, and those informations can be passed on to if it is a part of if it is kind of asked by a court, or if it is a part of the court order, then the CIC has to submit those reports to the regulatory as well. Right. On the right-hand side, if you see the functions of a CIC company, as I said, it collects, it kind of processes it, and there are a whole lot of process which we will kind of discuss in detail in the forthcoming slides. So it collects, processes, and then creates a report out of it and shares it, to the banks, to the financial institutions, or you can, as a user or as an individual, also you can go to any website, pay certain nominal amount, and get your CIBIL or maybe the credit information report as well. Yeah. So these are some of these critical principles, issued by RBI. Now, if you look at these principles, there are many controls that needs to be implemented. So first, a principle is care in collection of credit information. And now what it entails is that whenever you collect any credit information, that is basically the information from an NBFC or from a bank or from a financial institution, you need to ensure that you have a process in place to reconcile that what has been collected is correct or not, is complete or not, whether all the data that needs to be reported or need to be collected has been in the same format or not, because each time you will have to ensure that it is in the same format given by RBI. Each time you will have to ensure that, whether my, last year, for example, HDFC has given details of around 50 lakh borrowers. But if you this month, if there is a data for only 40 lakh customers, or maybe suddenly there is a spike in the number of line items to 80 lakh customers, that means that there is some issue with respect to the data that we have collected. So some of those analytical views are taken into consideration here. What are the controls in place to protect the loss of the data? So once you have the data collected, okay, what are the controls in place where it is stored? What is the access control in place implemented by CICs to ensure that unauthorized access of those data is not exercised? or it is not there. So it is very much important how you ensure that the collected data is accurate, collection data is complete, and it is completely protected against the unauthorized use or the modification, right? The second is data security and secrecy. So it again flows from the same point, but it's a different principle. So what it means is that how have you kind of secured your entire data? What are the security controls in place in terms of the what are the controls that you have to kind of against the malware attack, against any virus attack? Do you have an antivirus in place? Do you have, whether the company has an insurance taken against any such events? Whether there is a declaration that is signed. So there is a RBI regulation which says that any employee which is onboarded on the payroll of the company, or for that matter any outsourced consultant also, or any vendor for that matter, they need to sign a declaration of fidelity and secrecy, that any information they will have, they will not share those details outside the company, right? So how your security environment is kind of what do you say, tightened in terms of to ensuring that your data is secured, the secrecy is not breached. Even if it is breached, how do we ensure that the customer's data is protected? What is the insurance in place? So all of these controls are emanating for data security and secrecy. The access and modification. So as I said that, the company need to put in place certain access control in place to ensure that who should be the authorized person to collect the data, who should be an authorized person to make any changes. Let me tell you that a CIC, as I said, does not own the data, and hence they cannot, okay, and I repeat, they cannot edit any of the information they have received from a bank or a financial institutions or an NBFC. Okay, the reason is they do not own the data. So there is a complete process that needs to be defined. If there are any change that needs to be done in the database, it has to be routed through banks or financial institutions. So CIC has to kind of report to the banks and financial institutions what needs to be changed, why it needs to be changed. It has to be supported by a request from a customer, okay, because CIC will consider the data received by the banks, financial institutions is correct, because they do not, or they cannot make any modification. They just pull the data, push it into their model, run it, and create a report about a company, about an individual, or a microfinance for that matter, right? So they make any modification. So company has to, a CIC has to put in a process that modification right is not given to anybody. If the modification right is given, okay, it has to be supported by an approval. And there needs to be an audit trail that needs to be developed and reviewed on a periodical basis. So these are certain controls that emanates from access and modification, right? So, and I'm sure most of my friends on the call, including Ankur, yourself, you must have seen that there are certain issues in terms of your score. Now it could be because you made the payment on time, but there is a certain information which are incorrect. Okay, for example, Citibank credit card, you made the payment on due date. Okay, however, they reported that it was a default because of which your credit score is reduced. Right now, if you go to CIBIL, or for that matter any other credit information that I need this to be changed, they will actually ask you to raise a request. Now, that request will go to the banks and financial institutions that this is incorrect. Banks and financial institutions, they will do the investigation of the matter. They will change the data at their end. Again, they will upload the same data to the SFTP folder, and the credit information companies will pull the data, corrected data from there. Okay, so they will not make any changes in their database. Okay, that is a very important control to have, right? Data accuracy, as I said, that CICs need to put controls in place in terms of ensuring that the data is correct. Now, how to ensure that the data is correct? There is a check and balances that CICs run. For example, if my let's assume the PAN was XYZ in the last file, okay, that I received, and this time my PAN number is different. Okay, so the accuracy, okay, is zero, because it. So, and there are certain processes in which the CICs does this match in terms of the accuracy of the data. Okay, and if there are differences, or maybe the percentage of accuracy, okay, let's assume that 95% is a threshold. So if any time the level of accuracy, okay, goes below 95%, they will simply reject the data. They will update to the banks or financial institutions who had submitted those data, get the revised report, and then only upload. So these are certain controls that needs to be implemented by credit information companies, right? So moving on data collection and limitations. So what are the data that generally is collected by credit information companies? So as I said, the name, father name, address, gender, date of birth, contact number, the phone numbers, permanent account number, driving license, passport, voter ID, and some of these other information that are identified as a part of the individual. If the borrower is a corporate, then additionally they will also ask for balance sheet, profit and loss account, and some of those other informations as well. In both the cases, the credit limit, outstanding balances, repayment history in terms of if there are any defaults, very specifically, what is the amount, what is the period of default, are there any cases against a company or an individual initiated by any of the lenders. All these information needs to be reported. Right? Now, what are the data use limitation? So as I said that, the data can be used only for for permissible purposes. If you're an individual, you can go have a login, and then you can pay a nominal fees and you get your reports. Then apart from that, if you're a corporate, again you can ask for those informations or yourself. But as I said that if you want an information for any other person or any other company, and it needs to be there needs to be a power of attorney. Before that, they will not be able to share those details with you. Archival and length of preservation. So as I said that the CIR, the credit informations are collected and disseminated for minimum 7 years. Yeah. The information related to criminal offenses. So this is an exception. So if there are any information wherein there was a criminal offense against particular individual, okay, which remains a permanent in nature. Okay, so even if that offense was 7 years back, the same will be reported as a part of your report. But if you had defaulted 7 years back, okay, so the credit information may not necessarily, they should, but they may not report the 7 years old data. Okay, so your credit defaults will be reported for 7 years, and after that they may or may not kind of reported. However, when it comes to the criminal offenses, okay, it remains permanent in nature, because that talks about so as I said that since it is a criminal offense, okay, it will be reported. Now, the behavior of a customer, of a borrower, can change, but the criminal mind of a person cannot be changed. That's probably the contention of the act, right? Why this is required to be permanent in nature. Now, personal information with respect to individual is no longer required in terms of the above stated 2 points. There should be a process in place how and when the data which is older than 7 years are destroyed and erased. And in most cases, it made anonymous. Also, it generally depends upon whether they want to keep it as a part of it, because there is a cost involved to kind of store those data. Yeah. So moving on. So what are the products that CICs generally have? So we have always discussed about the credit information report, which we already know as a part of our personal these work as well. That because the CIR have, which is generally the CIBIL report or maybe the CRIF report, but apart from that, there is a product called portfolio review report as well, which not only talks about one specific customer, but talks about customer at large within a particular portfolio. Let's take an example, that personal loan. Okay, so how personal loan currently, okay, the customer loan is behaving, so not with respect to one particular lenders, but in an Indian economy, how the personal loans are being monitored. Okay, with a multiple, with taking a view from a multiple lenders and not specific to one lender. You can have customized report from a CICs if you believe that, for example, HDFC is my competitor, and I believe that I want to kind of understand and compare myself with the HDFC, that how HDFC is performing and how I am performing in terms of keeping the defaults minimum. Okay, I can get those portfolio level reports from CICs with making the and it is chargeable, of course. However, it is just a report. So I think Jitendra made a very good presentation of the analytics. So it only talks about the overview. So you saw in the example 3, which was basically the bidder, how many bidder bidded, how many were invited, how many of them bidded. So likewise, there will be a picturization or maybe the graphics that will be given, but the data, which is basically the complete data of the customer, that will not be provided because that is not allowed as per the CICRA Act. So it is not allowed by RBI, right? So this is again a control that needs to be put in place, that the products created by credit information companies, are those products, okay, in compliance with the RBI Act or not, right? So that is something that as an internal auditor need to see whether in the wake of the portfolio review reports, are CICs kind of sharing the credit customer informations to the banks or financial institutions who are asking for these reports or not, and what are the controls to kind of monitor that, right? The second is business intelligence. So there are certain reports and the products available with credit information companies, which gives a very strategic information to the businesses whenever there is a plan for basically. You would have seen that, okay, some of the microfinance or some of the NBFCs, they have certain plans in terms of creating certain branches, expanding from 50 branches to 200 to 300 in next 3 years. How do they take decisions, right? How do they take decisions? They do not have any data, right? So they reach out to credit information in terms of which are the company, which are the cities, which are the villages. So for microfinance, it is important to have the details from the villages, because most of these microfinances, they serves in the village, right? In the remote villages of the country. So let's take an example in the Nagpur. Okay, what are the products that are kind of offered by different NBFCs, banks, microfinance, and so forth, right? Now, and what are the target customers, the target borrowers? What is the ticket size, the loan ticket size? Okay, what is the percentage of default? Okay, what is the collection turnaround in terms of whether the collections are received on time? So these are certain analysis that gets generated out of the data that CICs receive. The same is shared on need basis, upon payment of fees. Again, so here also the entire data is not provided. It's just an insight that is provided to them, and it is allowed as per the RBI. Yeah. The next is business analysis. So you would have seen that banks and NBFCs, they kind of fetch the reports from the credit information companies. They can kind of customize based on their requirement. So there is a whole lot of analysis that happens whether those products has the capability to kind of extend those services to or enhance the existing product, whether they can do it or not. They do the analysis and then kind of extend those access to the banks or the financial institutions to use those additional features as well. Of course, the product has to be in compliance with the RBI regulations. So there should be a process in place. There is a committee in place. There needs to be a committee in place which discuss whether these products or the enhancement in the product is possible. One, from a technology perspective, whether it will lead to any enhanced level of risk, whether do we have a control in place, whether it is allowed by the RBI. So these are the certain discussions that happens as a part of the product committee. And based on that, the product committee kind of approve these products. While there are many other products that are available in the and which are allowed as per RBI also as far as CIC is concerned, but these are some of these products which contributes majority of the business in terms of the revenue. Okay, that is our second section. So our first section was basically understanding the CIC, which is important because, as I said, there are only 4 CICs in India. I'm not sure how many of the people attending this session would know, and hence I thought it's important to kind of make you understand what is CICs, what is the regulatory landscape in terms of the principles as well, and how the principles kind of dictates what control needs to be implemented by a CICs, right? And the products that are offered by credit information companies. Yeah. So moving on, what is the life cycle of a CIC? When I say life cycle, life cycle means how the so there are 4 to 5 processes. As I said, data collection, data processing, data quality reporting, data correction, and product delivery. Yeah. So start with data collection process. So as I said that the financial institutions and bank has to report certain data in a specific format. I can just take you through in the format as well, that what are the information that needs to be reported by banks and financial institutions. I hope my screen is visible, Ankur.
Yes, sir.
Okay. So this is the Annexure 1 of CICRA Act of RBI. So these are the credit reporting format for consumer and commercial borrowing. Consumer is basically the individual. Commercial borrower is basically the corporates. Now, what are the fields available? Right. So as I said that they need to become a member first. So member ID, the short name, the cycle identification, the date of reporting, okay, and some of these information.
Sorry to interrupt, sir, but only the 2 PDF is visible.
Okay, sure. So I will share this separately. Probably it is not visible.
Yeah, only the slide called annexures where 2 PDFs are attached. That is only visible.
Sir, can you stop share and reshare again?
Yeah, sure. Yeah, is it visible now?
Yeah, is it visible? It's visible now.
Sure, thank you. Thanks, Ankur. Yeah, so these are, so this is the format issued by RBI, wherein the consumer, which is individual, and commercial, which is corporate, needs to report. The member ID, as I said, that they need to become a member first to kind of, and it is mandated by RBI that all the financial institution has to become a member of credit information to get the information from them. Right, so you can't have a situation where you're fetching the information about the borrowers, but you're not sharing the data, right? So you need to become a member, you share the data, and you get the report as well, right? So these are all informations, address of the individual, the accounts, what are the various accounts, whether there are sanction amount, what is the credit limit, what is the settlement amount, if there is a settlement, right? And this is for the corporate, the borrower details, the address, the relationships. Okay, if there is a director, the director details as well. What is the percentage of control? What is the PIN code? So these are all details mandated by the RBI. What is the credit facility? that a particular corporate has. What is the account number? What is if there is a previous account number? What is the previous account number? The currency, credit types, whether there is any guarantee given, whether he is a guarantor or not. All these details are needs to be reported by financial institutions, right? Yeah. So I'll just unshare this and share the main PPT again. Right. So if there are any, so these are the data that is generally collected. I have also tried to give you a snapshot in terms of how these are reported. So it has the member name, state bank. You can see, against each line item, where the member ID, the ID will remain same, of course, because the name is state bank. What is the processing status, whether it is processed or not, and some of those other data. The data collection generally, kind of reviews once they collect the data, whether the collected data is as per the formats prescribed by RBI, whether it is for consumer, microfinance, or commercial bureau. Also checks whether all the mandatory fields within the formats are filled or not. Right? If there are certain data which is not filled, they kind of follow up with the financial institutions, get that corrected, and request for the revised data. So that is a collection process. So once you have the data collected, okay, once you have the data with you, then comes the processing. Okay. Now what happens is that in data processing, they kind of validate the data. As I mentioned in the earlier section, the accuracy of data is very much important, because if the data is incorrect, okay, the entire credit report will be incorrect. Okay, so for example, if there is a PAN number which is same, okay, so there can't be different PAN numbers. Sorry, same PAN number for Ankur and Dharmesh. And let's assume a situation where Ankur's PAN got mixed with me. Okay, and when I extract the data, okay, and I, for example, had defaulted, Ankur did not default, made any default, right? So when Ankur fetched the report, there will be a default on his name, but he did not. It was me who had defaulted. But there was a mixing of the PAN number, right? So these are certain checks that happens at this level. And as I said, there are certain threshold that CICs kind of developed. So this is not mandated by RBI, but this is generally an internal process that the CICs adopt. If that the line items are more than, and these are only illustrative, so do not mix that. Okay, this is a regulatory limit or regulatory criteria. These are for illustration. If, for example, greater than 20 lakhs, the more than 5% is on hold. Okay, so if my rejection is 5%, then it will be rejected. Okay, or it will be put on hold for them to kind of revert back with the revised data. If the volume is 10 to 20, then 10%, less than 10 lakhs, then probably 20%. So these are certain processes that generally credit information companies implement to ensure that the data that they have collected are accurate, right? Ankur, just wanted to check how much time do I have. I thought I'll just check with you.
Yes, sir. Yeah, you have, sir, about 20 minutes, 25 minutes. Yeah, so you can go ahead.
Sure. All right. So moving on, once you have collected the data, processed the data, so put on hold or accepted the data, then comes the data quality reporting. Okay. Now there are these checks and balances that needs to be done by a data quality team. They also check whether there are any error logs or not. There is a reporting of the percentage to the RBI also in terms of whether the data received is 100% matched, 60% matched, 80% or not. So that is done by the quality reporting team. Then comes the data correction. As I said, that once the data is data quality is checked, they will go back to the financial institutions, come back with the corrected data, and again then push the data to their model. And then last, but not the least, is product delivery. Now, product delivery is nothing but your credit information report. Okay. So, as I said, B2C, B2B, B2B2C, there are three types of channels in which the credit information reports are issued. B2C is nothing but Dharmesh going on any of the credit information company's website, pull the report for themselves. So it is business to customer, B2C, direct to the user. Okay. B2B is basically I've applied for a loan, okay, with a bank, and the bank fetches for my behalf, on my behalf, and I have given a consent. So it is B2B. B2B2C, you would have seen paisabazar.com and some of these sites. Okay. For example, the Paytm also. Okay. So it is for their merchant. It is not for themselves, right? So it's a B2B2C. So so Paisa Bazaar, if you go, and you would have kind of by now gone on any of their website, Paisa Bazaar or bankbazaar.com, they ask for a CIBIL score or a credit information score, right? So they ask for a consent. They pull the report and share that with you and with the their member also, who had kind of participating as a part of the business, right? So it's just a B2B2C business, right? The various types of reports I have tried to kind of mention here. Now the nomenclature could differ from one company to another. However, comprehensive credit report is nothing but the report that we generally get, the first free credit report, which is nothing but if you go on CIBIL, you would see that first CIBIL score is free, right? And then the moment you have that, you have used that as a free credit report, and going forward, they will charge for a money. That's nothing but first free credit report. Reports pulled by financial institutions, as I said, that banks and financial institutions, they extract the report on behalf of the customers to kind of review their creditworthiness, to take certain lending decisions. These are those reports. And then business commercial report, that is nothing but for a corporate. So with that, we complete the section on the life cycle of CRI. So with this, we actually understood how the entire operation of credit information works. Okay, right from data collection, what are the controls, what are the risk it has, what are the data processing, what are the minimum thresholds that we define to ensure that the data that we collected, data that we are processing is accurate, right? And it is complete. How the data quality reporting ensures that the same is reported to RBI. The data correction ensures that the data is corrected before it is put to production. And last but not the least, with the final product, we also discussed in terms of what are the different channels through which we can generate the report, and what are the types of reports, right? So moving on, so this is the last section of this session, is the challenges faced by the CICs. So there are, you can see two different colors in the slide. One is basically the bold and the black bullets, the fonts, and the green bullets fonts. The green fonts talks about the controls, and the black talks about the risk or the challenges faced by CICs. Okay, and this is my personal opinion. CICs are nothing but a technology company. Honestly, what they have is a data and the model that they have created. Okay, from a financial perspective, it falls under financial services because it is regulated by RBI. Honestly, but otherwise they do not have any deposit. They do not make any lending decision. It is a customer data that they need to kind of protect, and hence the quality of data, the cybersecurity risk is the most important risk from. So whenever we are doing any internal audit or any risk consulting work for a credit information company or a company which takes the help of a credit information company, it is important to understand how the CICs ensured the quality of the data, how the cybersecurity risks are taken care by the CIC, right? So certain controls we already discussed, that the datas are generally stored in an SFTP folder with an access. Okay, there is a check and balance in terms of understanding if there are kind of what do you say, if there is a spike or maybe there is the curve which is going down in terms of the number of transactions, you come to know that okay, there are transactions which are less reported, or there are transactions which are double reported. For example, 40 lakhs to 80 lakh customers has been reported by HFC is an example of the same. right? So that's the challenge that is that this industry faces. The controls that, based on my experience with CICs, is that SFTP folders works well to ensure that the data are protected. The certain checks and balances I've already kind of explained that those needs to be looked at whenever you are going for any work on the internal audit front. Cyber security risk, as I said, that how well your cyber security or IT environment is kind of hardened enough to ensure that there are no malware attacks. So because I've seen, in past, there are certain attacks on a daily basis for one of the CICs. Okay, for 15 days, there are so many attempts. Now those attempts are identified as an incident. Now, how do an organization ensure that those incidents are minimum? Right now, those incidents not necessarily translates into a data loss, but it can if your if your environment is not hardened enough. Okay, the incidents could lead to a data loss as well, right? It could lead to basically certain virus attacks as well. Okay, and we've seen in past that how the banks were also vulnerable in terms of certain data losses because of the viruses, because of the hacking, because of the unauthorized accesses, right? So how those security risks, the cyber security risks are taken care, right? It is also important. So access control is also one of the control that needs to be looked at because these are all customer sensitive data that the CICs has, right? So it has everything, right from PAN, the unit identification number, Aadhaar number, the payment history, and all, and this can be misused in many ways, right? So what are the sensitive data identification process? How we have kind of control on that? That is something that is important. Data on commercial accounts. So here the risk or maybe the challenges in terms of faced by the CICs is that the reliance or the reliance that is placed on the information received from the SMEC. I mean, it is very easy for an individual customer to place a reliance because it is directly coming. But there are additional data that comes from for SMEs. Okay. In terms of the balance sheet and P&L. Okay. Now, how do CICs place reliance on it? I know that these are audited financial statements. These are audited P&L statements, but we have instances in past. Okay, how those are manipulated by creative accounting. So how do CICs ensure that those data are correct, right? So that is one. The unique identifiers is also one important element here, because unique identifier is nothing but how do we ensure that Dharmesh with this PAN number is only one in the database and there are no multiple Dharmeshes with the same PAN, right? So with the implementation of Aadhaar, okay, this particular risk, I would say, to a larger extent, kind of taken care. But let me tell you, there are certain instances that we have seen this still persist. The issue still persists. This still needs to be kind of looked at on an ongoing basis, and CICs need to put in place whether there are multiple people against the same PAN, multiple people against the same Aadhaar number or not. And some of those analytics needs to be run on a daily basis to ensure that the data that we have are unique, right? This is again one important risk to have. And this leads to the litigation, which is the next risk. Okay. Now, what litigation is that? So I'll just give you an example. Sorry, I'm Ankur. I'm taking your name because that's only your name I can see on the screen. So,
yeah, that is not an issue, sir. That is not an issue.
Yeah. So Ankur did not get a loan from HDFC Bank, for example. I'm just taking an example, okay, just to kind of explain this particular risk. Though he believed that his credit history has been stronger, right? And there is a report that gets generated from CIBIL, from CRIF, from all these institutes, credit information companies, and your CIBIL score is, for example, is only 600. and you do not get a loan. Okay, but you believe that your credit history has been amazing, right? But there has been a misreporting, okay, incorrect reporting by certain lenders, okay, or certain credit card issuers and you hold certain credit cards, right? Now, where will you go? Where will you fight? Because you cannot go to CICs, because CICs will say that we do not own the data, right? They do not own the data. The data has been given by financial institutions, credit card issuers, and so on, right? So there is a risk of litigation, but there are still customers who believe that the report is issued by CICs. The banks has taken a decision based on the credit information reports, okay, and then you will sue the CICs, right? And this is the risk. And let me tell you, there are multiple cases of litigation on account of this, okay. And this litigation is not only faced by one CIC, but generally faced by all, because most of these banks and financial institutions, they are a member of all the credit information companies. They will have to become a member because they kind of share the data with them, right? So it goes to all of them, right? So this is a very important risk. How do you ensure that? And again, this goes back to the accuracy again. How you ensure that the data received is accurate. You can minimize the risk to a certain extent. You can have controls in place to reduce the residual risk to minimum, but you cannot completely mitigate this risk. The reason being, you do not own the data, right? But this analysis needs to be done, and what are the controls that organization has needs to be understood. Yeah. The completeness of the information, as I said, has been the challenge faced by the CICs. The last but not the least is customer grievance redressal mechanism. So there is a recent development that the CICs need to kind of appoint an independent ombudsman, which was not the case earlier, because of which this particular risk is taken care. But need to see how this progresses, because this is a recent recent development of the ombudsman. But yes, this has been the challenge, because the grievance redressal mechanism has not been customer friendly. That has been our experience, and hence this is called out as a risk or a challenges faced by the customer service redressal mechanism. Yeah. So yeah, I mean, we with that I conclude my session, Ankur. Will be happy to take up any questions if any have, or maybe you want this to be at the end of the third session.
Yes, sir. We will take the question answer session at the end.
Okay, sure.
Yeah. Thank you so much, sir, for such meaningful insights.
Thank you so much. Thank you.
Now we can move forward with the last technical session for today on Risk Trend 2023 Internal Audit. For that, I would now like to welcome Deepika ma'am. She is currently handling assignments involving audit analytics, exception reporting, application review, ERP remediation, information technology, general controls, and internal financial control for banks, NBFCs, and manufacturing companies. She was also a special invitee to Digital Accounting and Assurance Committee of SIRC of ICI. She was a joint secretary, Women's Committee of the Institute of Internal Auditors, Madras chapter, faculty of SIRC of ICI for Information Technology Training and Advanced Information Technology Training. Now I would like to request Deepika ma'am to share her views and take it forward from here.
Thank you, Ankur, for a nice introduction. It's a pleasure to be here today. So let me share my screen. Oh, sorry.
Yeah,
so visible?
Yeah.
Yes. So the topic for today's discussion for me is Risk Trends 2023. So how risks are evolving, and how as an internal auditor, how we have to evolve. So on that aspect, I have designed the agenda of this session. So first, let's see what is the objective of internal audit, what we are trying to achieve. So the first aspect which we are interested to achieve is the enterprise risk management. That is how we are going to add value to the organization. So like the first speaker shared, a purple auditor, a person who has technical acumen, who has business acumen, and who's able to deliver value addition to the management is the expectation. So, how we are going to achieve that expectation? By including enterprise risks into our audit scope, which includes business risk, political risk, reputation risk, and whatever that will impact the business, okay, in the short run, long run. So where we are able to add an independent value, okay, from an independent perspective on the particular business. So first perspective we need to get into when we are looking at ERM risk is it is more than compliance and regulation. So it starts with deep understanding of the particular businesses, processes, and controls. So what is the USP of the business? How they make money? What are the risks that could happen? So here the whole perspective which is evolving is the auditor's risk perspective of client's business. So that is the base wherein the auditor needs to build models, frameworks, and tools. So we saw how different tools we can use and frameworks we use, like tools like Power BI, Tableau, Power Query, Excel, frameworks like COSO, IPPF, internal audit standards. So data models, how we are building data models. So in CIC, we had seen extensively about the credit risk model, which is built. So like that, what will be the respective models which are applicable for the particular industry which we are going to audit? So these are the important perspectives which actually going to define the scope of the assignment and how we are going to handle it. So with the correct perspective, audit objectives being clearly set, and the methods which we are going to use for risk identification being set, the next aspect which we need to go into is the skills. What type of techniques we are going to use and how we are going to implement these models and frameworks into my client business. So this implementation part will be the aspect which is going to give my deliverables, which is value addition for the business. So value add, okay, VA is the most important perspective which is required for the management to actually give the internal auditor seat at the table. And once we get the seat at the table, how we are going to lead, communicate across teams to ensure that we are aiding the management to take quick decisions. Okay, it can be a business decision, it can be a procurement decision, it can be a regulatory decision. So generally, this is where the auditor is going to partner with the management to aid the business growth. So ERM is the objective of a business. Now we need to see, with this context, we need to see what type of controls and what type of risks that are implemented in the organization, what is required for the organization. And with the new year coming ahead, what are the new aspects that we need to bring into our audit strategy to ensure that we have reinvented ourselves, revitalized our teams to match the current industry perspective. So risks are ever evolving. So on this perspective, the first risk which we are going to see is, if you see the current trend, innovation comes first and regulation follows. So if you see the perspective from a credit information company itself, now there are so many industries that are using credit information, right? Like I can give an example of a business model where the particular company is working on a product where any industry, okay, if you want to do a procurement function and you want to do a vendor empanelment function, okay, what is the process the entity will follow? The entity will put a request for proposal, take some quotes, will be able to then evaluate the person, then take samples, what you say, vendor empanelment form, due diligence, so many processes there, right? So this business model, the company is actually taking out that procurement function, okay, where it is created a marketplace. It is empaneling vendors. Okay, let's say manufacturing company, you need some spares, okay, fasteners, screws, bolts and nuts, etc. Fasteners, okay. Now, as a third party technology company, I am empaneling, okay, all the best players in the industry who are supplying fasteners, okay. And what I'm doing is I am doing a credit risk assessment for him by using credit information company data, okay, like Equifax, IMARC, CRISIL, etc. Then I'm looking at the product quality, customer feedback, what he has received in different marketplaces where he is listed, okay. Then I'm independently evaluating the product quality, okay. Then I am doing a due diligence and I am coming with a new rating, like the credit risk rating. I am coming with a new rating where I am giving a new score to the vendor. So now, as a manufacturing company, instead of having a huge procurement process, a huge vendor empanelment process, I can directly use the vendor information available with this entity. Okay, so now he is using credit information, which was previously used only by entities regulated. Like, for example, mostly the credit information will be used by whom? Banks, NBFCs, who are giving loans, microfinance companies, vehicle loan companies, gold loan companies. Mostly all these will be regulated entities, right? So now who is the person using the credit information? He is a aggregator. He is doing for a procurement function. He is a technology company who's not coming under any regulation, right? So, like this, there are ever evolving business models where different aspects which were generally done for a particular perspective or particular purpose is used for alternate purposes. So initially, so sir was talking a lot of things about data privacy, data integrity of core investment company, and cyber security of the data which is saved in core investment company server, etc. Okay, so previously, since the regulated entity only was using, they had regulatory system audits. And core investment company was sharing data only to companies which had robust IT assurance, information technology assurance. Okay, so now there are a lot of other players who are using this services. So now what has happened, if you see, is core investment company has CIC Act. Oh, sorry. Extremely sorry. Credit Information Company is what I misspelled as. I mispronounced as Core Investment Company, CIC. Okay, Credit Information Company. So, Credit Information Company, CIC Act has come out with an audit requirement for any entity who's using credit bureau score. Okay, irrespective of whichever bureau, whichever CIC registered under CIC Act, should be getting themselves a system audit on a periodic basis, and they have prescribed the audit duration, etc. It's an opportunity. It's an opportunity for us CAs, where we are getting an opportunity under one more regulation to do a system audit. Okay, but if you see, CIC Act did not originally have this provision. This has come with the evolving business models and business. So this is there. I can take numerous examples of such business models where the regulation is coming behind, where the regulators are trying to keep pace in terms of exchanges, in terms of different aggregator firms, fintech companies, e-commerce regulations. So if you see, e-commerce came first, e-commerce regulation is coming secondary. So with this new business models and innovations that are in the industry, what innovation or what type of value addition that we are going to bring to the table? Let's say we are going to audit a taxi aggregator company, okay, which is having fluctuating prices for every ride which the customer is onboarding based on various factors: demand, supply, location. Then it depends upon the rainfall condition, the temperature, the traffic in that area. Okay, there are so many different data points that are captured before arriving at the price and the price surge. So now let's say we need to assure revenue for this entity. Okay, revenue assurance audit you need to do. What type of processes and what type of risk perspectives which we need to have to check for whether the company is having adequate controls in place to ensure that all the revenues accrued are booked, all the revenues booked are being disclosed for tax. So apart from the end product of compliance and reporting, if you see the process which is going through, which the entity is following to arrive at this, it is going to be totally different from a normal order to cash business process which we'll be auditing, right? So this type of innovation calls for innovation in our audit techniques, a paradigm shift in the risk perspective which we are looking at. This reduces our regulatory risk. Okay, so whenever a compliance is going to come before, like compliance is coming after the product is coming, for that current audit period, maybe your compliance risk is less. Okay, but that doesn't reduces the the perspective, or I'm going to say that doesn't reduce the accountability an internal auditor is having for order to cash process. Okay, it is still the accountability which you are having for the business, and the revenue assurance is going to stay intact irrespective of the regulation or the compliance. So this is a very, very important risk which auditors need to contemplate before to get ready for all the innovative new business models. So next risk which we need to evaluate is risk is not just seen as a control measure, okay, where you need to implement control. Currently, if you see, risk is seen as a performance enabler. Okay, there is a culture now which is developed or which is evolving in the industries where risk is delegated. Okay, risk is decentralized, wherein what a particular manager can do, what decisions a particular director can do, what decisions a particular CXO person can do. Okay, there's a decentralized delegation of risks that is happening, wherein these risks are going to be business enablers, and the particular role, okay, the particular employee assigned to the role is rewarded based on how he has forecasted and taken correct business risks, aiding business growth. Okay, so this type of decentralization is creating what environment or ecosystem which is called as a flat organizations, where employees are getting empowered to take business risks and rewarded for taking business risks. So risk is not fully an audit perspective now. Okay, so it is going one step ahead, where the risks are, all the business risks are decentralized, and for each business risk that is decentralized, auditor should now evolve and check or think about what type of risk is going to happen because of the decentralized risk structure, and evaluate the control and processes and documentation that is maintained to ensure that the particular business call was valid. Okay, this is the second key risk which we need to look for, which is a changing trend in the current year. So next risk perspective is collective risk management. So no longer any entity is staying in isolation. Now we have so much disruption that is happening in the industries, and all of them coexist. It's not like the ecosystem is so evolved that there is coexistence of the industry. They have something like our SCM and CRM. We all are into a networked ecosystem where a lot of companies, manufacturing companies, let's say take for example, squash companies. Squash is made from perishable fruits, right? So the SEM is so intact, where from the purchase, I'll not say purchase, from the uh, garden, okay, from the garden or the agricultural land, from the time of plucking and harvesting, okay, till it reaches my stores and till it reaches my production line, my lead time is less than even 24 hours. Okay. And the production is tracked. Okay. The particular batch is tracked not just from the stores or the vendor name, it is tracked up to the farm or the land from where that particular product has come. Okay. So we have now the ecosystem is so intact. Okay. And there are so many blockchain based ERPs that have come, where the entire SCM or entire CRM is into the same platform. They're sharing data. So one company's risk will actually have impact on the other company. Like how one company's boon is going to help another company. So it's going to be like what you say, a dynamo effect, where the particular industry or the particular ecosystem within which they are working is going to impact each other's business. So here when we to plainly talk about, this is going to be the market risk, not essentially CRM market, sales market risk. This is the overall my industry market risk, which we are talking about here. So now I cannot see my procurement function has the risk of only my entity. Okay. My entity's procurement team. I have to look at the entire SCM and see how particular, let's say, same the squash example. Let's say there's a cyclone or a rain, or there's something that's going to happen in particular village from where I'm going to procure. I need to evaluate the risk from that point. And I have to be able to forecast what could happen here because of that. What are my substitute products? What type of alternate product I can run in my production line today to ensure that the particular disruption that has caused in that particular land is not affecting my production line. This type of forecasting, this type of risk forecasting is essential. So something like in our, we talk about DR sites, disaster recovery sites, right? So what is disaster recovery site? I'll have one data center or one place where my main servers are located, and I'll be having another place, okay, which is like 500 miles away, another server where I am replicating the data. So if something happens to this location, from some other location, my data will be retrieved and I'll be able to continue business, right? So something like that is planned. This is for my organization internally. Okay, now we are talking about disaster recovery. If my suppliers are not there, how I'm going to immediately switch off this line to that line and get that product so that my factory is running. Okay, so something like that. Same thing for sugar manufacturing, because there also the product is agro based. Leave alone manufacturing. Let's take any other industry. It will be applicable, equally applicable. And with the help of digitization and digital transformations, where the companies are understanding the need for capturing data. Okay, the more data points they have, they'll be able to predict risk better and implement controls better. So considering this, now it is a very important risk perspective that the auditor needs to understand is risk is no longer perceived or forecasted keeping only the organization or auditee in mind, but keeping the entire ecosystem or industry. So next risk trend, which we are going to evaluate is the current businesses life cycles are reducing tremendously, and business disruptions are also increasing. Business disruption, here we talk about disruptive technologies. So what is disruptive technology? So there is a substitute or a new product innovation that comes in. wherein the previously used products are losing its importance, and all the sub customers are going for the new product. Something that has happened to, let's say, Nokia. So Nokia had reluctance to go for Android and newer version of phones, which was coming in the industry. And what happened after Android came in, it was not able to match the market demand. Automatically, the business faced disruption. So let's take mobile phone. Mobile phone is a disruptive technology for so many other industries. Let's take camera industry. So now there are phone ads that are coming wherein you can shoot an entire movie, okay, in using a mobile phone. So that is the level that has come. So we no longer use digital cameras. We no longer use film cameras. So the only cameras now which is used in the industry is professional cameras, which is used for filmmaking and ad filmmaking, wedding capturing, etc. So for that also now they are giving like this phone camera is better than professional cameras like that. So now if you see the camera industry itself has faced a huge disruption because of the advent of cameras embedded into mobile phone. So this is called disruptive technology. So there are so many disruptive technologies that have come in, that also in the recent past. And after our pandemic, if you see, there's a lot of disruption over e-commerce aggregators. Lot of middlemen have lost their their share, the margins, because now all are having direct shipping, direct selling. They are able to directly reach the customer. Okay, through WhatsApp they are able to do business. So these are all disruptive technologies which impact different business models. So as soon as we onboard a client or we are working with the entity, it is very important for us to see what type of new innovations are coming in that industry, wherein it could disrupt the particular entity's business. So this perspective, I'll not say only from a risk trend perspective or risk assessment perspective, which is important. This is also important from the perspective of what we call as going concern in our statutory audits. So as an auditor, there is some default assumptions based on which financial reporting happens, which includes going concern. So now if we are having some disruptive technology which is going to impact the particular entity or client's business, then that is a very key important risk indicator which I need to highlight. So the first perspective or first control, okay, which can be evaluated for this risk will be our portfolio management theory. So generally, don't put all your eggs in one basket. You try to put your eggs in multiple baskets so that risk is reduced. So even audit firms, we work in verticals. Okay, so something so that we have different revenue models, different business models, different heads. It's not person dependent. It's not one person dependent. It's not one product dependent. So it is very, very important as the business life cycle of a particular product is reducing. Like previously we had companies which stayed for 100 years. So even still those companies are there. So some durable manufacturers are there, but still they are not doing or not growing in the perspective or in the phase in which they were growing, let's say 3 decades back, 4 decades back. Okay, they're surviving. Oh, so newer companies are taking over a lot of business share or market share based on their innovation techniques, lean on infrastructure, lean on land banks, etc., wherein they are able to make much more profitability. So now considering reduction in our business life cycle, it is very important what type of reinvention my client is going through. So how am I going to highlight these risks to the management? How will they have to penetrate into new market? Is there a requirement for them to go into new product, new market? So this type of analytics is going to add value to the management. So not necessarily, if you see, most of the risks which we are talking about now is not restricted to the entity, not restricted to the auditing entity. Okay, this is going to be the external risk impact to the entity. So both are very, very essential. So advancement in our social media is the main aspect which has actually increased e-commerce reach to customers. The entire line of middlemen are not there. Now we talk about influencers. Influencers are the people who are now doing that middleman work. No longer actor and actresses are required for ad films. It's actually the influencers who are doing the aspect, and more than that, it's our SEO techniques and keywords and hashtags that is actually doing maximum work of the advertisement agencies and SEO, search engine optimization techniques. Okay, and hashtags and keywords is doing the maximum work, wherein you don't need actual face to promote the brand. Irrespective of that, depending on your product profiling, customer profiling, you will be able to reach the correct customer at the correct time, at the correct price where you want to sell. Okay, so these are very, very important risks that we need to foresee in this era. So next is accelerated reputation risk. So now when we speak about social media and all the entities having social media pages, hashtags, Twitter handles, where you are posting opinions, you are posting some, there are so many things in social media that you post, and there is negative publicity, positive publicity, negative wave that is running over your product. And now if you see, there is a very, very high, so apart from what you say, ESG, CSR, what we are talking about, where the regulator is looking for top 500 companies to comply, top 1,000 companies to comply. But if you see, the consumers are socially so aware of what you are doing, what you're doing to the society, whether you are creating a positive impact on your employees, whether you are creating a positive impact through your product, what type of components that is going inside your product. Okay, so now it is so evident that as an auditor, if we have not gone through all the customer feedbacks that has come to our client's portal, all the customer feedbacks that are come to our Google Apps download screen, okay, you will never understand the risk perspective in which the customers are seeing the entity. Okay, so reputation risk is running so high, like someone randomly, it's not randomly, I think someone posted about how beef is there in dairy milk, and the company had to come up with a very big press notice why in India they are not using beef fat in their chocolates. Okay, so one small trigger at anywhere, okay, any one person in any part of the country, any part of the world, the impact it creates on your customers, the impact it creates on your goodwill reputation is very, very high. So it is very important to see these comments first and to handle these comments, how you are. When we talk about reputation risk, there is one regulatory role which is required for any company having e-commerce presence, which is called as a grievance officer. Okay. This role is coming under the Information Technology Act 2010, okay, 2000 amended 2010. So Information Technology Act is giving a regulatory position, like how RBI is giving a regulatory designation called CISO, Chief Information Security Officer, right, for protecting the company's data and data security. Similarly, grievance officer is mandatory if you are going for any e-commerce platform or electronic media sale or rendering of services, sale of products or rendering of services. So how my grievance officer is handling this position, how we are reverting to all the different comments or likes, emotions that is shared in the social media about the entity. becomes very, very, very important. And that is going to be a key risk which we need to address in the coming years. I see, actually, the perspective is it's not just this is now relevant in 2022, it's going to be relevant in 2023. I'll not say like that. If we have not already added reputation risk in our audit program or risk control matrix, it's high time we reconsider and add these things. Okay, because these are going to, maybe this may even require a contingent liability balance sheet. The impact of these risks are so high that if we are going to ignore it, the cost of compliance is going to be very, very high. It may even cost the business. So there are so many things that we are seeing where they start a campaign, negative movements, where when the company is doing something against not being socially responsible, we are using pollutants, we are not taking care of the employees, we are exploiting employees. Now it becomes so easily, like a forest fire information spreads. So this is a very, very important risk that we need to foresee and ensure the controls are in place to prevent this, and also compensatory controls to ensure if something happens, how we are going to handle it, what type of legal team we are going to have under a grievance officer. So all this is also very, very important perspective. So now all these risks set, I'm sure we understand how much we have to re-energize ourselves and reinvent ourselves and re-engineer our IAS process, internal audits process and methodology, in order to ensure we are able to deliver the actual ERM for the business, enterprise risk for the business to the management. So some of the perspectives from my thoughts on what type of internal audit techniques that we need to include and what type of areas we need to re-engineer are given in this slide. So first one is controls have become very pervasive. We need to have very, very strong control where cost of control is not too high, and it's not like I have some process there, data is getting captured, no one is monitoring it, it is there or not, it makes no sense. That level of control obsession is already there. So now we have to actually re-engineer wherein all controls are pragmatic, implementable, and the process owners and the team who is working is taking that control seriously. And we also should ensure that the data points related to this control, where by, let's say, timestamping, capturing of information, capturing of checker information, capturing of the variance at which the approval is made, these type of, let's say, could be a very small data point, but when we analyze data over period of time, month on month, year on year, actually it is going to deliver a lot of value add where I'll be able to take more decisions. So implementing pragmatic controls is one of the most important perspective as an internal auditor, which we need to highlight. So the next aspect which we need to work on is continuous control monitoring techniques. So which is nothing but our CCM. Okay, CCM is continuous control monitoring. So how we are going to do? So in our first session, we saw about how we can plug in different audit tools or data analytic tools to our client's ERP. Okay, it can be, let's say, real-time analytics. Okay, it is possible where companies are having, let's say, a larger data analytics system which is plugged into ERP like SAP, GRC, BI. There are so many different tools. So that level is also possible. But at least to start with, even if our continuous is not real-time, even if we are having day-on-day analysis, Okay, it is going to help us, like end of day red flag report. These things also will be helping us to actually revert on a particular risk or revert on particular labs as soon as possible. So days are gone where audit happens after the year end, after the quarter end. You come and give the report. Then you go and check 3 months back what has happened, what document has gone. That is not going to work. It is high time that management wants this and what they have to act on now. So it's more like concurrent audit. I'll not say it's concurrent audit where we are doing transaction verification of vouchers, etc. Here, the concurrent audit is going to be already controls are implemented. You are monitoring controls. If there is a red flag, exception, control lapse, management should be given this information wherein they are able to, management in the sense I'm telling the key stakeholders, it will be, let's say, the process owner, okay, or the head of the department or the CFO, depending on the context in which the control lapse have happened, they should be able to act on it as soon as possible. That is the expectation which is set on the internal auditors now. So implementation of this is a very, very key aspect. So CCM will be equivalent to embedded audit into my business process. So embedding controls into my business process is the first step. The second step is going to be embedding my audit function also into the business process, wherein there is a level of automation which I can identify control lapses then and there. So this is a small example of a CCM dashboard. Like on a real-time basis, I am getting updates for a transaction which are having GRN quantity more than PO quantity. Okay, so if it is having less than 5% variance to GRN quantity to PO quantity, what is the quantum? If the variance is more than 5% to of GRN quantity to PO quantity, what is the impact? Okay, is the invoice unit price higher than the PO price? So, okay, if so, what is the amount? Okay, so for a particular plant, will I be able to make a filter? For a particular PO number, will I be able to make a filter? Okay, for a particular vendor, will I be able to make a filter? So what is the PO line items that was there in the PO as to the invoice? So like this, I can keep building different audit red flags which I want to look at in a particular business process. So this is a audit red flag or exception reporting, which is built into the procurement module, procure to pay function, where I'm visualizing, okay, where I'm visualizing audit points, right? Audit exceptions. So as and when the day-wise transactions are getting processed, on that particular day itself, when I get the transaction, it's easier for me to go back to the vendor, go back to my procurement team, see what has happened, why variance has happened, why he has accepted with the variance. But let's say 3 months later, after the quarter ending, I go and check and I come and tell this many transactions have gone wrong. The impact is this much extra quantity we have paid. What is going to happen? Even if you're blacklisting that vendor, the impact or the essence that the transaction or the audit observation is going to have will be very less when it's done post facto than when it is done on real-time basis. So next perspective which we have to implement is the agile audit technique. So agile audit is coming from a Scrum. Okay, Scrum is a project management technique which is generally used in software development. So what Scrum says is don't do the testing, okay, or communication at the end of the project. Okay, like let's say your project is 3 months long. Don't wait for 3 months to complete the report and communicate the report. It is saying break down the project, okay, into weekly deliverables, or let's say fortnightly deliverables, and every fortnight you take a review assessment, okay, and disseminate information. What is your finding? What is your constraint? What you are able to do, what you're not able to do. What you are able to do, escalate, give the report, close it. What you're not able to do, put it in backlog, review it next week. Okay. So that is going to be the process which we'll be following in Agile audit. So this way, what happens, let's say your audit is planned for 2 weeks time, or let's say 4 weeks time. You are not waiting for completion of the quarter, completion of the audit period, and then disseminating information, but you are going to do on a very regular basis where you are escalating your status remarks and requirements on a real time or a more pragmatic approach to sort out things and ensure your management is updated of what all work we have done. So this is a small a flow of how Scrum works. Okay, so in every component of the audit, which we called as, like, say, weekly reporting or bi-weekly reporting, so that is called as a sprint in Scrum. Okay, so each sprint you can plan depending on the project duration. So sprint can be for weekly once, or 2 weekly, like bi-weekly, monthly, or every 24 hours. It can be the sprint can be defined based on the identifiable components of your project. So every day you will have a daily meeting to ensure what was the deliverables yesterday, what is done, what is the backlog, what we need to do today. So every team member is very clearly understands what he needs to deliver that day. Okay, that is the main meeting requirement. Okay, that is the main agenda of the Scrum meeting. So it's not like 3 days some person is taking something, not knowing what he is seeing, and 4th day the manager comes and says, "Oh, you have seen the wrong files. This is not the data point you have to see. You have to check for signature, not just date." So that should not be the case. So every day there is a review that is happening. Every day there is a fresh delegation of work that is going to happen. So the person who's going to run this is called as a Scrum Master. So Scrum Master will be running. So he'll be doing the burn down charts. Okay, what is the daily progress? What is the daily deliverable? He'll be conducting daily Scrum meetings to ensure team is knowing what is the deliverable and what it should be done and what is the backlog. And after completion of every sprint, let's say our sprint is for 7 days, that is 5 days per week, 5 working days. So every 5 days there is going to be some completed task, okay, which will be sent for sprint review. So this may be my auditee response, this could be my management response, CFO update. It can be at a different level depending on the scope of assignment that we have delivered. Okay, and depending on this review, again, I will retrospect and start my next sprint. There is some backlog due to which I could not do it. I will add it to my Scrum backlog. That will again be included in my planning meeting with the sprint review team. Okay, and whatever corrective actions required backlog to be cleared should be taken along with the management. So the important aspect of Agile is task breakout, okay, and the project manager or the Scrum Master. So in an audit perspective, this will be my project manager or audit manager. Okay, my audit manager will be my Scrum Master, who should run this daily Scrum meetings, who should break down tasks, okay, who should allocate work, who should review work and monitor work and ensure that on a weekly basis there is a update, not just of what is done, what is not done, what is done, what is the observations in that, whether the observations are material, not material, whether they need to investigate further or not investigate further. All the decisions should be taken within completion of one sprint for that particular area which we have taken as a breakdown. So this is the perspective in which Agile methodologies work. This is equally applicable for audit. It actually gives a lot of value addition for the auditee and the auditor. Why I'll say? Because if we are not doing this weekly meetings, there is a lot of time and energy where auditor wastes or audit team wastes, wherein the management is not seeing something, not given data, not what to say, not allocated room for sitting. There'll be so not allocated desktop. There'll be so many unwanted backlogs which keep accumulating. And when we follow this agile methodology for audit implementation, I mean to say audit execution, uh, we find that we are able to complete audit with, let's say, minimum 30% less time than we would have done normally. Minimum 30% less time. And it creates the sense of what to say, support that the management needs to give to the audit team also. It's not like the auditor is like a visitor who's coming and sitting and waiting for information, waiting for person's time. This way, when we include all the management, like auditees, team members, update them on a weekly basis, they see how to report to us or to with us to ensure that this particular project is completed within time. So this is a very, very useful technique and a much look forwarded technique, not just for large assignment, small assignment, any assignment, any audit, let it be internal audit, statutory audit, any audit, agile audit methodology is a very, very useful technique which we can implement. And the next technique is audit red flag dashboards. So this is a very, very useful and trending area. So first, what we saw, no, the dashboard we saw for CCM is for the business process, right? So we took procurement as a business process. We saw what are the exceptions that are happening there. So similarly, we can take for order to cash, we can see controls in that, payroll controls in that. Those are CCM tools. Now the dashboard which we are talking is audit red flag dashboard. See how many audits you are doing. Okay. So this many processes are there. This many audit managers are there. This many auditees are there. In each audit, what is the observation? Are these observations resolved or not? How many hours I have spent? How many hours I'm yet to spend? What type of resource allocations I need? This is like an audit management dashboard. Okay. Small quick look at a small audit dashboard. So overall risk assurance, what is my risk score? What is my how much of walkthroughs I have completed? How much of testing I have completed? Total audit findings, which is not closed for more than 2 days. Total time required for corrective actions. Okay, different departments which required to be audited. So this is a very simple audit dashboard, but this is a very, very important aspect which we need to have to actually have a look at on a macro perspective, what there is pending. So this is very, very relevant in a larger organization where, let's say, I have group companies. I have, let's say, 10 companies in the group. Okay. How am I going to prioritize the risk to the audit committee? Which companies' risks are more critical to be discussed at an audit committee meeting? So that type of decision making becomes complex and it is time consuming, where every company individually you take and you discuss each point. Some immaterial points are coming up, some already discussed points are coming up, and it just wastes time. So when we are having an overall audit dashboard where we are consolidating different entities, audit completion status and risk status, open points, closed points, it gives an overall consolidation at a group level. What is outstanding, what is not outstanding, what is critical, what is not critical, which all are not regulatory compliances which I need to work on as soon as possible, which all are little less process related compliance which is required, but okay, let's say second level. So prioritizing, risk prioritizing, all that, no, at an management level, it will be easier when we have an audit dashboard. Okay, and the last area to re-engineer is going to be extensive use of technology in audit. So not just dashboarding tools where we are going to represent charts and the storyboards, technology from audit program, risk universe, what type of tools we are using for documenting our audit evidences, what type of tools we are using for conducting our audits, what type of analytical reviews we are doing, how we are capturing this market risk and market related information, how we are capturing information related to my cyber security risk, how am I controlling the vulnerabilities, how it is documented. All this becomes very, very, very important for an auditor. First level is understanding of different technologies. Second level is using maximum of technologies which will be useful for audit. Third one is having documentation of whatever we are using, because we are again guided by standards and peer review and so many other regulatory requirements. So these are very, very critical for an auditor to look at and implement. So let's look at an audit process with all the techniques inbuilt. So first level at which we start our audit will be the risk universe. So risk universe will be the overall the micro document which captures at macro level all the different risks which will be applicable for the entity, which includes my external trends, my internal data, okay, different business insights based on my key initiatives which I have taken, what type of new product implementations I have done, any restructuring activities I have done, okay, what type of risk mitigation, risk acceptance strategies the management has taken, okay. This all will go into my risk universe, okay. So for my risk universe, I take my management validation. I get the management concurrence that these are the things I'm going to do. And this is my risk universe. That is going to be something like a scoping document. So from there, I will have an audit plan. So what I'm going to do first, what I'm going to do next, how am I going to spread it across my team and how I'm going to monitor. So for each area I execute, I take auditee response. Next, again, I take another area, I take auditee response, I evaluate management control, I validate audit, again, I take my audit response. So it's like my mini scrum, okay, mini scrum that works. It's a continuous process. Let's say risk universe is going to have 900 controls. I'll be having audit plan where I'm covering every week 10 controls. So this will be a repetitive exercise which I'm going to do for the different team members, different auditee, and different this thing. But overall management reporting is going to be based on my red flag dashboards, which the management is going to look at key risks and key exceptions. So how risk reporting happens, how audit validation happens, only the key risks are going to the audit committee, management follow-up, leaders validation. And again, it goes into my business process, whether I need a new control, what type of risk mitigation or risk acceptance I'm having. Depending on this aspect, I will be redoing my business process. So once that is happening, I will change my risk universe for the new business process and I'll continue this process. So this will be a sort of audit methodology I'll follow for internal audit, including all my tools, techniques, agile audit agile audit methodology, and this dashboards, risk reporting frameworks, data analytics, all this also we'll be using. So this was a quick overview of different risk trends and control trends and in the industry and in audit, which will be more critical for us to accept and follow. So with this, I complete my session. I think any questions we can take.
Thank you so much, ma'am, for such grateful insights. So now we can move forward to the question answer session. And I request our faculties to quickly address some of the queries as we have limited time. So the first query is from Mr. Puneet Saruparia, that what could be the recourse for a borrower to get the information with CIC corrected in case of inaccurate data being shared by regular entities? I think this query relates to Dharmesh, sir.
Yeah. So they can reach out to CICs. who has reported the incorrect or rather information, the report, or they could reach out to the financial institutions also, which pertains. I mean, the details pertains to the respective bank or an NBFC or a financial institutions. So these are the recourse that they have here.
Okay, thank you, sir. Now the second query is from Anil Madhavan. So, is there is a substantial drop in score of any company where CIC has earlier given a better ranking? How the same is addressed by the same CIC for subsequent transactions of loans, etc.
So can you repeat, Ankur, the question?
Yeah, I'm repeating the same. That is there a substantial drop in score of any company where CIC has earlier given better ranking,
Mm-hmm.
and how the same is addressed by the same CIC for subsequent transactions?
So CIC does not, as I said, kind of modify any information. So the information flows from the banks or the NBFCs or any other financial institutions. So if there has been a drop in the score, it could be because the history of the payment has been deteriorated, and the same has been reported by any banks. If there is any improvement in the credit history in terms of the payment of the past records, then the same reflects as a part of the report. So I would reiterate, the CIC does not make any changes in the data.
Okay. But sir, how the same is addressed by the same CIC?
So CIC does not address unless there is a request or a complaint from a customer that the customer believes that there has been a change in the credit history or the report. If the customer, or now when I say customer, I mean individual or could be a corporate also, they believe that the credit score should be X, but it is X minus 10 or X minus 20. Okay. They can reach out to the CICs themselves itself, or they can also reach out to the lenders, because it gives the complete details apart from the scores of the multiple accounts that they have, uh, where their score was less on account of what? On account of the delay in payment with which account. They can if they believe that the account details are incorrect, the credit history is incorrect, based on what they believe is should be, so they can reach out to the respective banks and the financial institutions and then get it corrected, those details.
Okay.
Yeah.
Yeah. Thank you, sir. Another query is from Shreyas Srivatsan. That is the CIBIL score have any time limit for validity, or there is a time frame where they revisit?
So there is no validity as such, but the data is refreshed on a monthly basis at least.
And this data is maintained all the time in an encrypted format, right?
It is, yes. Yeah.
Okay, so I think these are all the four queries that was popped up in between the sessions, and
Okay.
I have asked this all the same. Now I would like to welcome CA Gran Chandra Mishra sir, Central Council member ICA and Vice Chairman Internal Audit Standard Board, for concluding remark and vote of thanks. I think he has not joined yet. Just wait for a second, sir. Let me call Shivani. Shivani, are you there?
So start questions.
Just a minute, sir. Yeah. Yes, sir. Gyan Chand Mishra sir will be joining us in a moment, so we can wait for him so that he can give the concluding remarks and vote of thanks.
Sure.
Right.
Hello.
Hello. Yeah, good evening, sir.
Yeah, good evening.
Yeah,
कैसे
yeah,
हैं sir?
yeah. Gyanchan Mishra sir has just joined us, and I would like to invite him to give the concluding remarks and vote of thanks. Handing over to you, sir.
So thank you, very respected speakers of the session, chairman of the branch, moderator of the session, and of course the participants. Good evening, all respected participants and everyone. Friends, we know that this is a weekly program we keep on doing under the board, and I hope that this is beneficial to each and every member at large. Friends, we all know that Internal Audit Standard Board is one of the very important board, which is playing a vital role in giving insight with regard to the internal audit, control systems, risk management, and all other management related uh, activities which could really contribute and which could provide and give value addition in the system of the managerial functions. And, program conducted. Since I am traveling, so I will not take much time, and I'm sure that this session has given a remarkable effect and impact in the knowledge base of the members at large, and we hope that the participants will keep on showering their blessings on the board and keep on joining more and more program in coming time. And I'm sure that the speakers will certainly will keep on giving their valued time to the board in order to keep ourselves updated to meet the expectation of the various stakeholders of the profession at large. So thank you each and everyone. I hope that everyone has something to take away at home. And being internal audit, such important function as of now in various organizations, whether this is mandatory or not mandatory. But if we see, this has become a very important segment for every organization to cut the cost, improve the profitability, having better managerial reporting system, having the areas which are risk prone to be strengthened. So I hope that this program is certainly going to witness a value addition in the knowledge base of each and everyone. So thank you everyone, and thank you the board officers, Shivani, and all other officers present over here, speakers and participants, everyone. Thank you, one and all.
Yeah, thank you so much, sir.
Thank you.
Yeah. So in the end, I would like to thank Charanjot Singh Nanda sir, Gyanchand Mishra sir, Jitendra Khatri sir, Dharmesh sir, Deepika ma'am, and all the technical team for helping in making this webinar successful. And thanks to all the participants for being a patient listener. Yeah. Thank you so much to all
Thank
the
you.
faculty members.
Thank you.
Thank you, everyone.
Thank you.
Yeah. Thank you.